Hello, welcome back to Finance Speaks. I'm Kyle Sadler, President of Precept Wealth Management and best-selling author of I'm Retired, Now What? Yes, it's that time again for our fourth quarter and the 2020 market update. You see, it's in my opinion, and others may share the same, that the media today, for the most part, has moved away from fact-driven reporting to an opinion-based data reporting. Some facts may be present in their reports, but if a comparison is made, actual events compared to the clinching articles published over the prior years, well, there seems to be a lot of contradiction. I may be speaking in a generalization, but it appears to me also in the world of finance reporting that this is happening also. Let's take a look at 2019 articles. You see, back in January 2019, articles were published that said the stock market experienced the worst December declines since 1931. May 2019, the media started up with the trade tensions and economic growth concerns. June and July, falling interest rates around the globe drove positive returns for bonds, but dragged down stocks. August 2019, here we go again, about trade tensions and economic outlook worry. September and October, slow growth within the global markets. And yet, here we are today. Amid the continuous noise of tariffs, recession, and slow economic growth, stocks had posted the best year since 2013 for the S&P 500, over a 31.5% rate of return. Bond indexes rallied at part due to the falling interest rates at over 8.7%. With all this ongoing media noise, we have to focus on reality and not have the talking heads opinion. You see, the hardest pill to swallow is that many people fall into the trap of acting on opinionated reporting rather than fundamental investing. You see, my hope is to get investors to understand that a stock is just an inanimate object and cannot read a newspaper and doesn't have feelings. It can only act on a company's performance and the environment that surrounds it. And this is my daily drive in assisting you to sorting through the noise and basing our decisions on the core foundations of risk, time horizon, goals, and asset allocations. Oh, yeah, that's right. I'm giving you my opinion. What makes me different from a talking head? Well, your reaction is understandable, but hear me out on my opinion, whether it's right or wrong. What I can say is last year we had a great year, and as I predicted in my commentary last January 2019, I was correct. Oh, but the market actually exceeded my conservative prediction of being over a 20% return in the S&P 500 to returning an actual 31.5%. However, I can never get complacent with my comments in the stock market. Even though my concerns for a recession have been reduced, well, actually postponed, and I will discuss that shortly, I am always cautiously concerned about the economy and the probability of the next recessionary period. Where are we now? Let's look at economic indicators at a glance. Yes, I'm aware that there are more, but I just want to highlight a few to support my statements. Okay, market volatility remains in the lower end of the typical range. Treasury yields are down from the third quarter. Unemployment remains low at 3.5%. Consumer sentiment remains high on strong employment and business conditions. Great, Kyle. You picked the positives to use in your examples. Okay, just know that my goal here today is to give you a globalized outlook for those that are interested in just hearing me say that right now I am confident that we are further from a recession and market correction than I feel that we are closer to one. So, If you would like to discuss more of an in-depth analysis, please feel free to contact me, because like everybody knows, I love to talk economics. Still room to run. So, what does a 2020 vision look like? Okay, yes, it's corny, but this is the only time I get to tell my dad jokes. Okay, let's take a look at the global market outlook, and we're going to look within the United States first. I think that the Feds are on hold during 2020 due to low inflation, and I also think that interest rates will remain the same for the remainder of the year. Next, November's presidential election will likely be a major source of uncertainty. Okay, just a brief aside. I understand that many have a political party or a candidate that they are adamant about. However, history has shown us that the markets don't care about a candidate or a party. What the markets are concerned about are certainty and uncertainty. So, as long as there is uncertainty as to who will be the next president and vice president, we will see market swings. So, don't panic. I do not believe the market to act any differently than any other election year in the history of elections and the stock market. Oh, and when the news makes a report on a down day, just know that there have been many of those in history, and we are still alive today to know that we made it through a down day. Okay, the last point, and this is probably the question of the hour, recession. Okay, looking at everything and how it's shaped up, I am postponing my outlook until possibly late 2021. Okay, that may seem like a little bit more, but we're looking better. Now, for a real brief as far as the foreign markets, the U.S. dominated the global equity markets as a whole in 2019. Therefore, this may lead to my belief that there are more attractive valuations internationally. So you know where I'll be looking. Final thought. So Kyle, tell me, what should I expect? Well, barring a major, and I mean major, not media-created event, until November 3rd, I think that the only excitement we're going to experience will be on Twitter. So until then, I don't see a lot of market growth happening until post-election. However, I am going to step out on a limb today and say that my belief is that we will see an average year with the S&P 500, meaning a possible 11% positive rate of return. Therefore, to translate this into a potential of your expectations, what I think a moderate risk level in a well-diversified, well-allocated portfolio should have a performance return around 6%. But we won't know until December 31st, 2020. So until then, I will keep you posted as I'm working on your family's legacy. In the interim, if you have questions about your account or the markets in general, or if you just want to catch up and chat, feel free to give me a call, because this is how finance speaks. I'm Kyle Sadler, headed out until next time. Be blessed, and may your vision this year be a perfect 2020. So a special thank you to the following: the Federal Reserve Bank of New York Center for Microeconomic Data, Russell Investments, Standard & Poor's, and Robert Siller. Because of these companies and individuals, assistance with the research, information, and guidance are what makes these videos possible. Thank you.